Hi, this is an example of why preparation is so important in the E-mini S&P 500 from Thursday the 1st of December 2011. Now the first thing that I would note after such a big move is that possibly the market might be due for a breather. From the low on the 25th, we'd moved from around 1150 up to nearly 1250 in basically 3 days. So that's 100 points in nearly 3 days. So that's the first piece of information to take on board. The next important thing is, well, why have we done that? And clearly there was a few aspects to this, possibly the most notable one being that there was a coordinated action agreement by various different central banks to provide dollar liquidity, and you can see that the market actually gapped open on Thursday from 1196 to 1229, so that's over 30 points. Now the next question I had would be, well, it's moved this far, is there anything stopping it from going any further? Now immediately I can tell you there's one thing that comes in that's pretty important, and that's that you can see there's a bit of a consolidation area right there, and this is coming in slap bang in the middle. So there's probably quite a lot of volume being done there, and it's normally a good place for the market to pause at, to stop, to take stock and see what happens. Now if we go back a bit further, this by the way is a continuation chart, but it's valid nonetheless, and for a significant amount of time we were in this big trading range. So lots of volume being traded up there. We've just come into the middle of this balance area. We've just tested back into the longer term range where the market was trading for several months, and we've moved quite quickly to get there. Now the last piece of information that I would have taken, and I felt was quite important, was that the ADP employment figure came out quite strong. ADP isn't always seen as a reliable indicator of non-farm payrolls, but people sit up and take note generally when it does come out way out of line. And after it came out, there were a number of analysts who were revising up their estimates of what non-farm payroll would come out as. But of course people want to see the actual figure. And that was due out on Friday, so we had a whole day in between this big move up and non-farm payrolls, and there were various other things going on in Europe as well, and we were waiting for all of those things to happen. So we moved quite far quite quickly to an important area, and we were waiting for some important data. However, had you just looked at the move in isolation, the S&P had moved up and it was really on a roll, and there'd been a great announcement by the central banks that they're going to provide liquidity and make credit easier for the banks who need to get hold of dollars, and therefore their lending is going to be better, and overall that should help things. And you might not have seen those things. Very, very simple aspects to the market, however very important. So let's see what actually happened the next day. I'll just scroll forward for ease. This is on a 3-minute chart. We can see the close on the Wednesday was 44.5. So as you can see as well, it actually opened up quite strong and pushed higher, and actually backed up that view that perhaps it might carry on going. However, that was pretty short-lived. And we can see that basically what it did for the rest of the day was range. And it closed actually very close to where it opened. So that was the importance of preparation. I hope you enjoyed it. Thank you.